Good morning, everyone. Welcome to the Insurance and Real Estate Committee's public hearing for Thursday, March 7th. And we're going to get started. Our first speaker is Deputy Commissioner Jared Kofsky from the Connecticut Insurance Department. Welcome, Jared.
Good morning, Senator Cabrera, Representative Wood, Senator Wong, Representative Pavlock D'Amato, and distinguished members of the Insurance and Real Estate Committee. Thank you for the opportunity to provide testimony today in support of the department's bill and act concerning captive insurance. So this proposal brings flexibility to captive insurance owners consistent with the department's goal of being a captive domicile state of choice and keeps us competitive with the captive laws in several other states. In addition, the department closely monitors the financial condition and practices of insurance carriers, including those captives, to help ensure that a strong industry is available to provide a wide range of insurance products in Connecticut and to pay covered claims arising under the products provided. By way of background on captives, a pure or single parent captive insurance company is owned and controlled by its insured. The purpose of this type of captive insurance company is to pay its owner's losses and afford the owner more control over its risks and losses that occur. The captive structure is generally an alternative to purchasing insurance coverage from a traditional commercial insurer. While a pure captive is perhaps the most common type of captive, the Connecticut insurance law contemplates other captive types that operate similarly, including a sponsored captive. So a sponsored captive is a corporate entity formed by a sponsor, for example, an association, corporation, trust, or other entity, with a core linked to several protected cells. The cells are established to ensure individual participants operating like a pure captive insurance company. Each cell operates independent of the others and the company's core and has separate assets and liabilities associated with its individual owner. So this proposal would allow a protected cell the ability to convert into a new protected cell, incorporated cell, or captive insurance company. So with this bill, a protected cell is provided flexibility to convert without any impact to the assets, rights, benefits, obligations, and liabilities of the protected cell. So as an example, a business that initially insured its own business through a protected cell may over time determine that it's better served by forming its own pure captive insurance company. This proposal would allow a seamless transfer of the assets, benefits, obligations, and liabilities associated with the insurance provided by the business's protected cell to the business's newly established pure captive insurance company. I know that's a mouthful. Just by way of further background, I just want to mention captive insurance companies, including those that have protected cells, do not provide insurance directly to the general public, but instead provide a form of self-insurance for the businesses. Under this proposal, the conversion of a protected cell does not extend any of the risks insured by the captive insurance company onto the general public purchasing insurance from a traditional commercial insurer. So captive insurance owners seek flexibility, which aligns with the department's goals, again, of being a captive domicile state of choice and keeps Connecticut competitive with other states that have captive laws. So thank you very much for your time, and I'd be happy to answer any questions if you have any.
Thank you, Deputy Commissioner. So I just want to go over a little bit of your testimony.
Yeah.
So regarding the competitive nature, that's a goal of this committee as well. I mean, we worked alongside you in making sure captives can domicile here and seeing the industry kind of exponentially grow since that took place. Talk a little bit about the competitive nature of the technical changes that you're doing here.
Sure.
So maintain that.
Yeah, so these proposals are mirrored after laws that exist already in North Carolina and Vermont. Vermont is one of the largest states that has captives domicile there. In fact, it is the largest. And oftentimes we look to them and follow what they are doing while still taking a Connecticut approach with regards to how we are regulating, being that tough, fair but accessible insurance regulator that we always seek to be. But we do follow the trends and don't always follow the trends. We are not necessarily chasing numbers as it relates to captives, but we do want to bring strong captives to the state of Connecticut that provide the flexibility to business owners who are looking to establish them. I'd say, I think in the last 5 years or so, we've gone from having 17 domiciled captives here in Connecticut to, I think the latest number is 51. So we're moving exponentially. And with the support of the General Assembly, we've had the ability to hire additional staff to support that growth. And we look to continue on doing so.
So the sponsored captive, so it sounds like what the technical changes here that you've asked for are really just, kind of a way of business. You're using a cell now, and you would allow a seamless transition into forming its own captive. I was wondering if you could give us an example of what that looks like.
Yeah, so under this example is that you have a sponsored captive that has, it's kind of a larger block that has protected cells sort of coming out of it. So I always view it as, a tire. You have the hubcap in the middle and the spokes that come out, and the protected cells surround that sponsor. Now, those protected cells self-insure themselves. They use administrative support from the sponsored captive and the like in order to do that. But the protected cells self-insure their own business. What this does is allow greater flexibility to convert the protected cell into other potential entities, and perhaps including its own pure captive company. So it allows that business transition flexibility for those entities that we're seeing in other states as well.
So just referencing a bill that came through our committee, we had looked at, looking at possibly doing a farmer's captive. And when we have been exploring this, we've been consulting with the Crumbling Foundations captive, who have said that they have an additional cell. So we could technically run both captives under the same program with the administration to remain under what's in existence today, correct?
I'm not fully aware of the current structure of that captive right now. It is domiciled in Connecticut. We do regulate it. That one is a little bit different than what I would say your typical captives are, given the financial support provided to it. But yeah, we can go back to our captive unit and talk about that structure as well. But that one is unique. What I'll say is we have seen in other states where they do have captives for farmers. Those are more closely linked to association captives. And I believe Montana has something like that as well, where, it's an association that supports and ensures its own risks through that association. But we can get back, and I'll talk to our captive division more on that.
Sure. We have a question from Senator Anwar.
Thank you so much, Madam Chair. Madam Chair, I just wanted to reflect on your question as well, and perhaps give more data for the Crumbling Foundation, which was one of the most challenging issues of its time at the time. The captive insurance was a lifesaver for hundreds of homes and the community. It has worked seamlessly and very effectively. So I think the same model is what we should do, because it has been very, very helpful. So I believe long term for our farmers, a model like that, just like you've stated, is probably the way to approach. I just wanted to make that statement.
Thank you, Senator Anwar. Any other questions from the committee? Thank you, Deputy Commissioner.
Thank you.
Next up, we have Jim Paris. We'll come back to Jim. Next up, we have Keith Walsh. Oh, he's on Zoom.
Great. Yep,
Jim,
I'm here. Are we good?
We're good.
Oh, great. Good morning, Chairpersons Wood and Cabrera, ranking members Wong and Pavlak D'Amato. My name is Jim Paris, and I represent the Home Builders and Remodelers Association of Connecticut, which is a trade association made of about 800 businesses engaged in residential construction in our state. Our members include builders, developers, remodelers, and those businesses that facilitate our industry. I'm here today to testify in opposition to House Bill 5376, an act concerning home improvement contractor and salespersons. You have my written testimony, so I'll take this opportunity to summarize and answer any questions you might have. This bill is commonly referred to as the Storm Chaser Bill, and it's intended to deter out-of-state contractors from swarming into the state after a catastrophe and taking advantage of unsuspecting property owners. The HBRA is concerned that while well-intentioned, this bill casts too wide of a net and will ultimately harm law-abiding businesses. Ultimately, we believe that a bill that focuses on catching unregistered bad actors and educating the public on how to be savvy consumers would be much more effective at protecting consumers from unscrupulous actors. With that said, the HBRA does not take exception with the following provisions in the bill. Section 2, paragraph 2, which prohibits contractors from paying homeowners deductible to induce work. And Section 3, which requires business name changes to be recorded with DCP within 30 days. With that being said, we do find the following provisions of the bill to be particularly harmful to law-abiding contractors. Section 2, paragraph 1 eliminates a contractor's ability to collect more than 50% upfront. For contractors working with custom materials that may, in and of itself, make up the majority of the cost, think cabinets and countertop replacements, the labor would really just be a small percentage of the overall costs. Section 2, paragraph 3 eliminates a contractor's ability to advertise and offer incentives such as coupons or prizes. We think this is a bit heavy-handed, and we question whether it unduly infringes on commercial speech. In addition, we have a number of large retail members who do installation work whose businesses models would be dramatically impacted by this provision. At the very least, we'd suggest that this ban only applied to unregistered contractors. Section 4, paragraph 1 requires contractors to maintain adequate insurance, for which we do not dispute. However, the bill doesn't identify what is customary. For example, is it customary for a self-employed business owner without employees to be required to maintain insurance, workers' comp? And the answer is no. To require them to do so would in essence, further disadvantage the law-abiding contractors versus the underground contractor.
Your 3 minutes are up. If you could please summarize.
Sure. Section 5 gives the commissioner the ability to revoke or respend a certificate of registration for unpaid taxes, and it doesn't really give any sort of discretion pertaining to instances where there might be an actual issue with a DRS. Section 6 identifies home improvement contracts that would be found unenforceable. And I'm happy to talk in detail if anyone has any questions about that. But thank you for the opportunity to submit testimony. I appreciate it.
Thanks, Jim. I just want to go back to the coupon section. Can you just give us a real life example of that being used by your contractors now?
Yeah, so we have larger businesses in our association, like flooring companies, for example, that have large retail locations that also have installers that would fall under that are registered home improvement contractors, and this would really kind of hamper their ability to be able to do business the way they typically do. I mean, they advertise commercials on TV, radio, print, etc.
And then can you just complete your testimony on section 6? You said you had some additional comments there.
Yeah, so I mean, it identifies reasons for which the home improvement contract will be found to be unenforceable. It requires that the contract contain an itemized list and description of all home improvements to be performed. In emergency situations, that could be pretty complicated, especially if immediate repair is needed, or in situations where the homeowner is adding changes to the materials or scope of work while the work is underway. So, that obviously just could be a bit problematic if you're required to, in each instance, provide a brand new contract with itemized work list, including total cost and and cost by the itemization of the work. Section 6 also requires the contractor to include a provision that states that the method of payment is at the homeowner's discretion, includes options of cash, check, or credit card. Those transaction fees can add up, so I guess, to really about 3% of the contractor's net profit. And when folks who are law-abiding are competing against underground contractors, which arguably make up about a quarter to a third of those doing business in our state, those individuals who are not registered don't really have the overhead. They don't have the registration fees. They don't have the assessments. This would just further widen the disadvantage position that home improvement contractors find themselves in.
So are you seeing, so the bill really is a consumer protection bill for out-of-state contractors and preventing really taking advantage of Connecticut residents during certain, instances. Are you seeing that happen?
Well, I can tell you not with my members, right? They're all licensed or registered, I should say, and properly insured and bonded. And so, certainly, anecdotally, I hear stories like that from time to time. Fortunately, we as a state don't experience that many catastrophes, if you will, or natural disasters. And I'll knock on some wood as I say that. But certainly, I'm sure there are instances, and I think DCP would probably have those complaints and be able to provide you that specific data. But I can only speak anecdotally. I would say, if you allow me, is that there are states that have what we commonly refer to as the storm chaser bill or legislation, that those provisions in those states were enacted with the support of their state HBRAs, and they have some commonalities that I could speak to. For example, they only identify. Well, first of all, I think it's the state of Wisconsin. They identify what is a catastrophe in statute. And then, the legislation pertains to times in which catastrophes are occurring or have occurred, and therefore, they, are limited in their scope and time, and really address those particular instances. Alabama, for example, makes it a felony for contractors to take advantage of Alabama residents during a time of a catastrophe and then go back home to another state. They've actually arranged for extradition rules with other states, and when there's a catastrophe occurring, they put up roadblocks. They have a licensure station and inspectors to keep the criminally minded at bay, if you will.
All right, this is really helpful, but we certainly do not want to hinder businesses that are working, correctly and licensed and registered with the state. So all of your comments will be taken into consideration. We'd like to work with you as this bill moves forward. We clearly have a lot of work to do. So thank you for your feedback. I see a question from Representative Pavlak D'Amato.
Good morning.
Good morning.
So the language, I'm looking at lines like 184 to I say around 203. And did you, I know you mentioned some of the other things. I just can't remember if you mentioned, did you have problems with those lines and the requirement of having that information?
I apologize. I don't have the bill in front of me.
Okay, so that language is when a person is seeking a certificate of registration, for them to include all a little more detailed information as to name, address, all subsidiary names, phone number, email, that
Nope.
that
Yeah,
information.
thank you for that. No, and that is part of my testimony. We're perfectly comfortable with
Okay.
the added information provided to DCP.
Okay, so then the insurance coverage. And I think you testified that as far as the insurance coverage and maybe a couple other provisions of the bill, you didn't like it because you're competing against unlicensed individuals. Is that correct?
No, and I know my testimony actually said that we as an association support individuals and encourage our members to be properly insured. I think the question comes when I believe in that provision, it refers to reasonableness of insurance. And so the concern there is that who's defining that? It can be a little bit nebulous, as you could imagine. And so there are instances where it may not be customary for, say, a sole proprietor without any employees to have workers' comp, for example. It just doesn't really make sense for that requirement to be there. What I would suggest is that if this bill moves forward, that provision at least be tightened up a little bit to really explicitly identify what is reasonable, what kind of insurance expectations there would be. Again, we do encourage our members and every registered home improvement contractor to be properly insured and bonded.
Okay, that makes sense. Because I do have I do understand, as a sole proprietor, not having the resources or, every penny is means something, and since budgets are so tight, and they're laying out sometimes for supplies. So I understand your concern with some of those provisions, and I get it. Let's see. As far as the advertising portion and coupons portion, what was your what exactly, I'm not sure what's your interpretation of the point of that language in this bill? I understand your position.
Well, obviously, the bill itself is referred to as a storm chaser bill. Unfortunately, there's nothing in this bill that would distinguish an individual who's from out of state or somebody working in our state. They're both equally subjected to this bill the way it's written. And we have, as I mentioned earlier, some larger companies within our association, some flooring companies, for example, that you would see on TV or or hear on radio, or certainly read about in print, that advertise specials and incentives all the time. And so they have large showrooms. People come in, they take a look at the product, and to entice them, they'll give them or advertise certain incentives for them to come in and take a look. Those individual companies are also home improvement contractors, as they have employees that also do the install work.
Okay, so right, and I agree with you. The portion as far as notice of cancellation, and that, did you have an issue with those sections?
No, not that I recall.
Okay. And then any other suggestions as far as specific language that you would like to see in here? I agree with your last statement, by the way, as far as it being a storm chaser bill, and this seems to be a little bit not necessarily fully addressing those concerns. But if there's any language besides the ones we just discussed that any other suggestions that you would like to see in here that you think would help that situation?
Yeah, and I would just encourage folks to take a look at a couple of other states, and I'm happy to provide details about those states. I think Iowa, Wisconsin, Alabama are all states that have worked together with their state HBRAs to find common ground and to find legislation that more specifically addresses instances in where there are catastrophes and folks are coming out of state, either unlicensed or unregistered, and wreaking havoc on our residents here in Connecticut. So we're all about increasing DCP's capacity to enforce and uproot and find unregistered contractors and to bring them to justice. We just don't want to find scenarios in which law-abiding contractors are turned into unlaw-abiding contractors, right? Because then nobody wins. Obviously, there is a safety net, if you will, with the Home Improvement Guarantee Fund that folks, if they find themselves to be victim of of shoddy workmanship or of any sort of malfeasance on the part of a registered home improvement contractor. But those same protections aren't found for individuals who go and contract with a non-registered individual. So it's incumbent upon us, and policymakers to really encourage folks to be registered first and foremost, and not to discourage those who are law-abiding or do anything that would encourage those folks to say, hey, I can't compete against the 30% of the people that are out there, doing work without a registration. So I guess if I can't beat them, I'm going to join them, right? We don't want to have any more people in that unregistered pool.
Yeah. And I have to say, I've run into the situation where I have an individual who has sued a contractor, and he has sued the company, did not sue the individual. And apparently you have to, in order to get money from that fund, you have to also sue the individual contractor and through their number, even though the person contracted with, let's say, an LLC or a company. And got a recovery from an LLC that may no longer exist. So
that's interesting, and that's the first time I'm hearing of that. And if that is the case, I'd be happy to work with you, a representative, on language that kind of allows easier access for consumers to the guarantee fund.
Yeah, that would be great, because the suggestion to me was to amend, and I apologize, Chair, for going off a little bit, but it directly falls under this bill. The person was told by somebody to go amend the judgment to add that, but the judge wouldn't amend it. And maybe they do sometimes, but in this case, they wouldn't, for whatever reason, because the case was done. So, this person is out thousands of dollars for somebody who ended up being on meth and, just completely took advantage of this person. So, I think that's probably a situation that people, similar to the storm chasers.
Yeah. I would love to learn a little more about that specific instance. It's the reality is that a registration is for the business and not the individual. And if the business is sued because of issues pertaining to malfeasance or shoddy workmanship or what have you, it seems to me that that would be the appropriate avenue to find any sort of recourse, particularly through the guarantee fund.
Right. That's what confused me about it too. But yeah, there's definitely, you can't recover if that, if it's an LLC or if it's an entity as opposed to the person. So that confused me. So yeah, I'll definitely reach out to you after this.
Great.
Thank you.
Thank you.
Great. Thanks, Jim. I don't see any other questions from the committee. Thanks for
Thank
joining
you,
us.
Representative. Take care.
Next up, we have Keith Walsh from the Federal Home Loan Bank of Boston.
Thank you, Chair Wood, Chair Cabrera, ranking members, and the rest of the committee for the opportunity to testify today in support of SB 323. My name is Keith Walsh, and I'm the General Counsel of the Federal Home Loan Bank of Boston. The Home Loan Bank of Boston is one of 11 regional home loan banks chartered by Congress in 1932 as a Depression-era measure. Banks, credit unions, insurance companies, and community development financial institutions located in New England are eligible to become members of the Home Loan Bank of Boston. We currently have 64 Connecticut members, including a dozen Connecticut insurance companies. The home loan banks are member-owned wholesale banks, meaning we're owned by our members and only do business with our members. And we have a dual statutory mission of providing liquidity to those members and supporting affordable housing and community development in the region. Members pledge collateral to access home loan bank funding, and that collateral is generally in the form of residential loans and mortgage-backed securities. That is a little background about the banks, the home loan banks. I'll shift gears and talk about the purpose of the bill. The bill is designed to create parity among Connecticut's banks, credit unions, and insurance companies in terms of their access to home loan bank liquidity. And to do this, the bill will resolve a disparity between federal banking law and Connecticut insurance law. Specifically, under federal receivership laws that govern the receivership of a Connecticut bank or credit union, the home loan banks are afforded protections that do not subject the home loan bank to a stay period or any risk of avoidance of our collateral. By adding comparable protections to Connecticut's insurance laws, we will ensure that we can provide liquidity to our Connecticut insurance company members on the same terms that we currently provide them to Connecticut banks and credit unions. The bill includes language recommended by the National Association of Insurance Commissioners that subject the home loan bank to a 10-day stay period and require us to work with Commissioner Mace and his team during that 10-day stay period on an orderly liquidation in the unlikely event a Connecticut insurance company member fails. Under existing Connecticut law, the home loan bank is entitled to liquidate its collateral, but subject to a stay period of an open-ended stay period. This bill replaces that open-ended stay period with a 10-day stay period that provides certainty as to when we can liquidate collateral, again, in that unlikely event of an insurance company member failure. I can tell you that similar legislation has already become law in 27 states, including last year in Vermont and New Hampshire. In addition, SB 323 mirrors a model act adopted last year by the National Council of Insurance Legislators. So in closing, I thank the committee for your consideration of our position in support of the bill and respectfully request that the committee vote it out favorably.
Thank you, Mr. Walsh, for joining us today. I have a few questions and we'll open it up to the committee. You spoke in your first paragraph about what the bank does, but can you go into the services a little bit more? Because I heard you mention something about affordable housing even. So I just wanted to get more information on exactly the services you provide.
Sure. So the home loan banks, as I mentioned, have a statutory dual mission. On the one hand, it's to provide liquidity to our members. And because of our government-sponsored enterprise status, we're able to access the global capital markets on advantageous terms throughout all economic cycles. So we're a reliable source of liquidity for our members. The other part of that mission I mentioned is affordable housing and community development. And each year, the Home Loan Bank sets aside at least 10% of our net income towards affordable housing and community development. And I did bring along some numbers. Since we started our affordable housing program in 1989, we've contributed $114 million in subsidies to Connecticut. That translates to 4,594 affordable homes built in over 180 housing initiatives in Connecticut communities. We also have down payment assistant home programs for first-time home buyers. And through those, we've assisted 756 Connecticut home buyers. And in the last decade, we've also developed a Jobs for New England program. And through that program, we've awarded $32 million in loans and created or retained 751 jobs in Connecticut. So That part of our mission is not really the thrust of this bill, but it is our liquidity mission that facilitates our community development and affordable housing mission. Without that business on one side, we can't simply do enough. 10% of less is less. So facilitating the liquidity mission really just furthers our mission of supporting affordable housing and community development in New England.
And just to repeat what you said, really the protections that you're asking for in this bill helps that mission.
Exactly. The protection we're seeking in this bill will make us better able to provide liquidity to Connecticut insurance company members and thereby facilitate their access to liquidity while facilitating our ability to continue to do all the great work we're doing on the affordable housing and community development front.
So I wanted to talk about the 10-day stay and why it's important. I mean, you kind of hit on it a little bit, but I think it requires a little bit of emphasis because this is kind of new for me even to understand. I'm pleased to hear that you have consulted with the Connecticut Insurance Department on this. I'm also pleased to hear that NAIC and NCOIL have models that, you know, you're working on. So if you could just elaborate, I mean, it sounds to me like it's really just getting to the finish line in a time frame rather than leaving it open-ended.
Yeah, so as I mentioned in my testimony, the home loan banks are only permitted to provide funding on a secured basis. So it's always collateralized. The risk of an open-ended stay period is that if market moves during that stay period cause that collateral value to decline, we're left in a position to have to liquidate more collateral to satisfy any outstanding debt from that insurance company. By putting a fixed 10-day stay period, we remove that market risk from the equation. We provide certainty as to how much collateral is necessary to satisfy the outstanding debt. And during that 10-day stay period, you'll see in the bill, it requires the home loan bank to sit at the table with the CID, Commissioner Mace and his team, or their appointed receiver, and agree on an orderly plan for that liquidation of collateral. They're our members, so they own stock in our bank. We'll have an agreement as to return of that stock. I think it provides certainty, whereas under the current law, there is no certainty on some of these matters.
And you know, I think you're talking about worst case scenario here. So how often are insurance companies liquidating?
Yes, this is an exceedingly rare scenario where a home loan bank insurance company member fails. In fact, since the advent of the home loan bank system in 1932, there have only been 2 insurance company members that have entered receivership. So notwithstanding that this is that exceedingly rare situation, and we're not here because we believe there's any imminent threat to an insurance company in Connecticut. Instead, this is part of being a highly regulated federal financial institution that's required to plan for those worst case scenarios.
Great. Any other questions from the committee? Representative Delnicki.
Good morning.
Good morning.
I learned a little something here. I sit on the banking committee, ranking member there, and the home loan bank. Now, the open-ended time frame that you had initially spoken of, and 10 days is what you would like to have is the ask.
Mm-hmm. That's correct.
Are there any other banks that operate in the same way that you operate?
No, the home loan banks are a unique animal formed by Congress to facilitate housing finance. It was a Depression era measure, an amazing idea of forethought that 91 years later, we're still fulfilling that mission and have not had any material changes to the model.
And you mentioned the fact that you have a first-time home buyers program.
Yes, we have two first-time home buyer programs. One that's called our Equity Builder program that assists home buyers up to 80% of area median income. And then we recognized a few years ago that really housing workforce is an acute issue. So now we have a housing out workforce program that goes up to 120% of area median income to assist first-time home buyers that are in that workforce kind of area median income range.
And you've actually offered them to folks that live here in Connecticut.
Absolutely. We offer it throughout New England, and I checked with our team before I came down, and 756 Connecticut first-time home buyers have benefited through those programs.
I'm going to ask you to share that program with me if you could. I'd like to take a look at it because we're also working on something much like that here in the banking committee.
Absolutely.
Now-
Yeah, that'd be my pleasure.
Just one question pertaining to the 10 days.
Mhm.
Could you just go over the thought process of why it's 10 days or instead of say 5 or 20 or whatever? Just so that we're clear on that.
Yeah, I don't think there's any magic to 10 versus 5 or 20. I think 10 versus 30 or longer is really where you could see that market movement and price of collateral. I think 10 days is where we settled on as the right mix of removing that market risk from the equation of liquidating collateral while also providing an adequate, and it's 10 business days, I believe, to be technical. Also providing adequate time for the home loan bank to sit with the CID and go over an orderly plan for the liquidation of our piece.
Well, that makes sense. And I certainly hope the committee supports this because you're doing some good work there, obviously, and to have been chartered back during the Depression as one of the recovery measures, I'm assuming, you need to have that ability to act when you have to act. And I thank you for coming forward, and I'm glad to hear about your first-time home buyers program. And I'm looking forward to getting the information on it. Thank you, Madam Chair.
Thank you. Representative Delnicki. I'm sorry, Representative Meskers.
Thank you very much, Madam Chair. I want to thank you for your testimony. Madam Chair, I had the privilege of having a lengthy conversation last night with our friend here from the Federal Home Loan Bank. I think he's done an admirable job in presenting. I had originally some concerns with the insurance industry in terms of the liquidation period of 10 days. But the more I've wrestled with it and thought about it, I think that this liquidation will probably result in lower collateral levels being required of our insurance industry. So absent any objections from the insurance industry, and I did have a conversation with the commissioner as well, it sounds like the appropriate type of legislation. I would suggest that, respectfully suggest probably checking with one or two of the major participants in the program in our insurance industry that they don't see any reasonable objection to the accelerated right in resolution of collateral. Ultimately, when they pledge that collateral, they probably have already surrendered their rights. And I think under this program, what I'm hearing is the amount of collateral they're going to be required to post would be materially higher if they didn't have surety on the 10 days. And if I could just get that, I guess, as the question there, is that what we're saying?
Yeah, that's right. And piggybacking, I think, on some earlier testimony on a focus of this, sounds like what has been a focus of this committee. Right now, because this law has been passed in Vermont and New Hampshire, insurance companies in those states are able to access home loan liquidity on better terms than Connecticut insurance companies. With this bill, it'll level that playing field.
So I really thank you for the clarity there. I know I wrestled with you last night on the issue, but I had a chance to digest it on the rather lengthy ride home, so I appreciate it. Thank you. No further questions, Madam Chair.
Great. Seeing no other questions, thank you for joining us.
Thanks again.
Next up, we have Bill Gunnison.
All right, good morning, everyone. Senator Cabrera, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Bill Gunnison, and I'm the Legislative and Regulatory Counsel for the Motor Vehicle Protection Products Association. I'm here to testify in support of Senate Bill 322, an act concerning motor vehicle protection products. The Motor Vehicle Protection Products Association is a national trade association with member companies that include providers, retailers, administrators, and insurers of vehicle protection products. The trade association seeks to establish a uniform regulatory landscape that minimizes confusion or disputes about the regulatory status of these products, while at the same time assuring protections for consumers. The association supports the proposed language in Senate Bill 322, which clarifies that motor vehicle protection products can be offered in Connecticut subject to the same requirements that apply to extended warranties. Vehicle protection products, sold primarily by auto dealers, provide financial protection against damage to or theft of motor vehicles. These products include repair or replacement of tires and wheels damaged by road hazards, removal of dents or creases repairable by paintless dent removal, repair of windshield chips or cracks or replacement if the windshield can't be repaired, replacement of keys or key fobs that become inoperable or are lost or stolen, coverage for excess wear and use of a leased vehicle, and theft protection products. The legislation provides important protections for consumers, including financial assurance requirements for providers and disclosure requirements. The bill would also exempt vehicle protection products from the provisions of the insurance code, bringing Connecticut in line with the 40-plus states that have determined that vehicle protection products should not be regulated as contracts of insurance. By providing an independent framework for these products, consumers are afforded the opportunity to purchase valuable coverage that a primary insurer either doesn't offer or that wouldn't provide a meaningful benefit after application of a higher deductible and the risk of raising future premiums. Senate Bill 322 ultimately provides regulatory certainty regarding the status of vehicle protection products in Connecticut and would provide protections for consumers who purchase these products. On behalf of the Motor Vehicle Protection Products Association, I encourage the committee to support Senate Bill 322. Thank you.
Thank you for coming on. So I was wondering if you could share with us how popular these products are, if they are, who's using them, and just the usage here in Connecticut.
Yeah, so currently in Connecticut, it is a little bit of a regulatory gray area as to where these products fall, whether they're extended warranties or whether they're contracts of insurance. And the idea behind these products is that they're really supposed to cover the smaller dollar claims that you wouldn't typically file an insurance claim for. For example, if you drove over a pothole and you had $400 of damage to your tire, you wouldn't file and claim with your insurance carrier if your deductible is, say, $500. In that case, you would, if you had the service contract or the vehicle protection product for your tires, you could use that to get your tire replaced. And so it's supposed to cover the smaller dollar items that would not be smart to file an insurance claim for.
And are they popular amongst Connecticut residents?
Well, so I don't have that data, given that it's a bit of a regulatory gray area. I don't have that information, how many are sold or anything like that, but that's information I could get you after the hearing if you'd like.
Great. Yeah, I just am, interested in the usage here in the state.
Mm-hmm.
So just talk to me a little bit about the difference between, not being regulated as an insurance product, but being regulated as a vehicle protection product.
So what that means is that the vehicle protection products would be subject to the requirements that currently apply to extended warranties. Extended warranty providers have to either get a contractual liability insurance policy to back their claims, or they have to be able to demonstrate that they have enough reserves available to pay claims as they come due. Those are the two key protections to ensure that these companies are not insolvent. And those are requirements in the extended warranty statute. But this bill would make clear that only those requirements in the extended warranty statute apply to these vehicle protection products. And so, for example, provisions in the insurance code requiring rate filing and things like that would not apply to the vehicle protection products, as they currently do not apply to extended warranties.
Okay, great. Any other questions from the committee? Thank you for joining us, Bill.
All right, thank you.
Any other speakers? We have Eric George.
Connecticut. Thank you very much. Eric George, President of the Insurance Association of Connecticut, and I'm here today to support House Bill 5376, which has been identified as the Storm Chasers Bill. I want to talk briefly about the bill. You have my written testimony, so I'm not going to refer to that, but I also want to talk about what I thought was the excellent testimony by Jim Paris from the Home Builders Association. So the Storm Chasers Bill is an NCOIL model act, and it was the platform to which we wanted to make sure that the conversation was begun about bringing in consumer protections to dissuade less than reputable individuals from performing work on individuals' houses and then potentially getting more money than was contemplated for that work. Let me say that it is not the intention of the IAC or anyone who supports this legislation to go after law-abiding, licensed, duly regulated home improvement contractors. So with that, I think that Mr. Paris made some excellent points, as well as the other testimony that you have submitted from various home improvement contractors. We would like to work with the Home Builders Association and the contractors to reach an accommodation. Under Mr. Paris's testimony, he did indicate that there were certain provisions that he did not object to. And I think that those are good places to start from, because I do believe this is a conversation, and I do not want the perfect to be the enemy of the good. I think this is something, and I think Mr. Paris said this in his testimony, that there are examples, there are models out there, be the Iowa or Wisconsin, where the home builders associations of those states were able to come alongside the insurance associations and present a bill and support a bill that everyone could get behind. That is what we are looking to achieve here. So you have my written testimony. I wanted the opportunity to talk about, we are here to work with the committee and the home builders on this. We are not wedded to any specific language.
I think that's great to hear. It sounds like we have some work to do on it. So we look forward to working with you on figuring out some of the kinks and getting to a point where we can move this forward. Do you have any other, I wanted to just, you have no comments on the Federal Home Loan Bank?
I thought you might be asking me a question on that bill. So Senate Bill 323, I believe I have the number correctly. I thought that very good testimony was just offered in support of it. The IAC has members that both support, some members support 323, and there are members of the IAC that have concerns with Senate Bill 323. Because of that, I am taking a position of neutrality on the bill. I wish everyone who is supporting the bill well, and good luck.
Thank you for that. Any other questions from the committee? Thank you, Eric.
Thank you.
Any other testimony today? Thank you, everyone, for joining us.